Well, joining me for a closer look at what's playing out on the market scene at midday is Andrew Padoa from Sasfin Wealth. Thank you so much for your time, Andrew. Not a lot that's going on within the JSE, but a lot going on in the macroeconomic environment. Let's actually start off with China that came out with first quarter GDP growth that surprised to the upside. Besides the tariff worries, would you say that the Chinese government can breathe a sigh of relief that it has done everything that it can for that economy?
Yeah. I think my answer would be no. I think the GDP, look, it caught a lot of us off guard. 5.4% GDP growth is pretty stellar when it's expected to be 5.1. They saw very strong export growth as part of that GDP. But, and this is the big but, is the tariff situation and what happens now. What they've made clear is that the current Chinese domestic demand is insufficient to kind of offset what's going to happen in the tariffs. So I think what will be very interesting is to see next quarter's GDP data from China and how much that's fallen.
You know what, it's sad because, you've done everything that you can currently and things are looking good. But the problem is the uncertainty that lies ahead. And of course, we've had a number of financial institutions downgrading their forecast for Chinese growth. I think I even saw the most conservative one saying 3.4%. I think that was USB. A lot of people saying that those tariffs should maybe shed off about 2% or just more than 2% off of Chinese growth. So it is going to be quite an interesting next 3 months to see where the Chinese economy goes. Talking about China, we've had Nvidia taking quite a knock in its share price, and this is because the US has now come in with some export requirements, restricting some chip exports to China. Just talk to me about that and obviously how Nvidia sees this impacting the company and its numbers.
Sure. So the US government informed Nvidia on the 9th of April that a license will be required to export the H20 chips to China. These chips are, Nvidia's, they're pretty strong chips. They're not as strong as Blackwell, but these were the chips they were able to ship to China under previous rules. Now, Nvidia is seeing a Q1 charge of about $5 billion associated with this H20 product for inventory. This is not a ban, it's a license requirement, but based on what Nvidia's done now with this write-off, you would think they're not going to get the license to export these chips to China. So I think the main point is this is a short-term blip for Nvidia, not great, but Blackwell is the main driver for 2026. We're in an AI super cycle. The Blackwell demand for that chip is very, very strong. So I still like Nvidia long term.
All right. What about ASML? Because ASML is usually seen as the more defensive chip play because it provides the machines that make the chips. But looking at the first quarter results that they produced today, seeming things are looking a little bit shaky with their net booking surprising to the downside. What's your take there?
So from ASML's side, slight miss on earnings. It was good to see that there was some margin expansion, and as a result, there was a beat on the earnings side. But like you said, it's the guidance and future bookings that looked soft, and I think that's why ASML's shares are down today. I still very much like this business, like I do with Nvidia, but I think the next few months are going to be choppy as they try and figure out also the impacts of tariffs. So maybe they're kind of guiding for the conservative side, because nobody, to be honest, I don't think anyone really knows what's going to happen with tariffs and what the consequences are going to be right now.
All right. Well, let us go to other sectors of the economy. Retail coming back home and looking at clicks. It came out with interim results today. It saw growth in turnover that translated into double-digit growth in the bottom line, volume growth, margin expansion. Seems like they're doing everything right. Just characterize that performance for us.
I think these results just show how resilient and how phenomenal Clicks is as a business. Despite a very anemic economic growth, to still achieve double-digit earnings growth, achieving margin expansion in South Africa, it's really, really impressive. Like you said earlier, despite the uncertainty around the world, they're still opening 50 stores, roughly 50 stores, as well as 50 pharmaceuticals this year. So I really like Clicks. I think they're an incredible business. Historically, they've always been expensive. but they're on a forward PE now of 22 times, which is definitely one of the cheapest forward PEs they've been in the last decade. So I think it's worth JC investors having a close look at Clicks at the moment.
All right. What else are you looking at closely? Your stock pick for today, Andrew?
Sure. My stock pick for today is Meta. So we're in interesting times, like I said, and I want to invest in a founder-led business that have a track record of navigating change. And I think Meta is a great example of this. They've done acquisitions such as WhatsApp, acquisitions such as Instagram. So you've got Mark Zuckerberg there, and founders can think long-term. They're not worried about hitting Wall Street's expectations for next quarter. They're worried about the durability of the business for the next 10 years. Meta's on a spot PE of 21. The S&P is on a spot PE of 24. So you've got Meta, which is a far superior business, in my opinion, to the index, trading at a cheaper multiple to the index.
All right. Well, thank you so much for your time and for your analysis on what is currently moving investors' money at midday, Andrew. That was Andrew Padoa from Sasfin Wealth.